Okay, very good morning to everyone. Hope you all had a good evening. And just taking a look then, a recap of the market movement seen predominantly overnight, really. The first televised debate, of course, of which was amped up in the press yesterday. We were talking about that statistic that the person who comes out on top of this first televised debate has gone on each occasion over the last 40 years to go on to win the presidency. And that caused a lot of nervousness overall in the market. There were other negative factors at play, rumours about capital depletion or a negative situation of the capital balance, if you like, at Deutsche Bank. That led to weakness, biggest fall in the Eurostoxx bank index in around 8 weeks. You also had a lot of headline press talking about hard Brexit. Liam Fox kind of kicking that off as well at the weekend, those comments about tough negotiations that are going to be forthcoming when Article 50 is eventually triggered at the beginning of next year. So despite positive IFO, a number of negative catalysts leading to more of a flight to quality bid we had yesterday in the likes of gold and the yen. And weakness you can see here sharing the DAX and the S&P, pretty sizable moves to the downside yesterday, which supported fixed income futures more broadly. So we had the debate last night, and to surprise of some, just because of the recent polls that we've had, Colorado, North Carolina, Florida, some of the key kind of larger swing states have all been going the way of Trump. But actually, the CNN ORC poll out after the televised debate concluded had 62% of viewers claiming that Clinton won the debate, compared to 27% which believed Trump was the victor. For any of you who didn't watch it, I'll give you a brief kind of summary of what the general tone is coming out of various pundits and analysts and so on. Generally speaking, he lost his cool as Clinton rattled him with attacks on his business record and assertions that he had a history of racism. Again, this goes back to when he was spinning that conspiracy theory about Obama was not born in the US. Many analysts argued that Clinton had easily defeated her opponent by remaining controlled and demonstrating her knowledge without appearing too wonky. I think the most summarized one, though, is that he is the change candidate and will automatically get the votes of tens of millions who hate Clinton, but perhaps this will stop Clinton's drift downward in the polls. I think that's probably more when you kind of step back from the overnight volatility that we've seen. I think that's more on point of the situation. Clinton's been declining, Trump's been soaring to a degree in the polls, but I think that this will act as a bit of catalyst to potentially halt that from happening. Don't forget, this is the first of 3 televised debates. Obviously, the first one has some historical significance, but the next one's on October 9th, and the one after that is on the 19th of October. So there is some still yet to play for. And if you think about it, how many times has Trump been down and out, counted out as a credible candidate, then he's managed to claw his way back. So I wouldn't say that this is a foregone conclusion, which may be some of the reason then why you're seeing a bit of a pullback initially as some of the moves that we've had from the open. First of all, I've seen quite a few of you pretty active in the market this morning. One thing is that a lot of the actual positive market move, i.e. this phrase that we use of risk on, that occurred overnight. Now, don't forget the televised debate was happening between 2 to 3:30. And so if you look at the moves in, say, gold, in my top right, you can see the sell-off. In terms of the DAX future, you can see that gapped up at the open, and that was because, look at the S&P and the rally that we had during the actual debate itself. Remember, when someone asked me this morning, what was the result of the debate? Well, really, you've just got to look at the charts, because the market prices tell you, because this all would have been open. The S&P future, you can see between 2, that one candle, that's where the rally occurred. And that was a pretty phenomenal rally, really, for that time of night. Very unusual to see that sort of type of size of price movement. So obviously a lot of people were up late. A lot of banks may have manned their desks to take advantage of that move and to facilitate client flow. But what you've seen here is a bit of a resistance found after the size of that move. People obviously all looking at the same kind of price point, that R1, which has acted as resistance a couple of times, and now you're just seeing a bit of profit taking, I feel, from some of the elevated moves there. Likewise, with the DAX, you've had a gap up of around 0.6%, which is pretty large, and so net, you've had a bit of a pullback as we look to close the gap. Likely the move also exacerbated slightly when we dropped through that low print from yesterday morning. A lot of people likely would have been looking at that, and then it's just extension of that move to the downside. Actually, probably looking at the S&P from where we are at the moment, there's an interesting level which we've been talking about last week and yesterday, was the 44.25 level in the S&P. This was last week, and this was pre-Fed, when that level acted as really stellar resistance on multiple occasions before eventually we saw that break upon release of the Fed. Being more dovish, that supported equities in combination with the technical break saw that powerful move to the upside. Well, yesterday we had the reverse of that, an initial test back down at that level, and then it acted as support on first test, and then it came back down to break. So now that we've gone back through that again, any move to the downside could get quite interesting, because you got that level with the pivot sitting just around a point above it as well. So any pullback here, from a fundamental perspective, if the market, when the US continue to take a more positive outlook on this turn of events, given, let's say, an eradication of uncertainty that Trump was gaining some ground, then that could be potentially an interesting level to look at there. Actually, just taking a quick look at some other ways to look at this. Thanks to Fez for sending through this chart early this morning. This is the US daily cumulative mood signal. So this is social mood signal. So it's a little bit subjective, I guess, because when you track, I guess, social moods, they can be a little bit subjective, bit of a grey area, but nonetheless, the point being the same, that the S&P, denoted by the blue line, you can see whenever the mood has fluctuated, then generally speaking you tend to see a movement in the corresponding index, but the divergence has grown more recently. Looking at the performance, this kind of summarizes the risk on terminology to a certain degree, because as you know, the Japanese yen tends to strengthen in times of strife or uncertainty, and what we've had overnight is the reverse of that. So looking at the Japanese yen, which we were saying yesterday could have been one of the more interesting products to trade if you were trading live in an overnight session, this circled section on the chart here, that was the Japanese yen weakening overnight. Again, this is purely on the unwinding of safe haven bets, which we saw yesterday given the risk off tone. So this was yesterday's session when equity markets were selling off. Then we've had the reversal. So you can see how the difficulty the Bank of Japan has in managing monetary policy, because irrespective of the likes of comments from Abe overnight and general economic data and news flow from Japan, a lot of this market movement is based upon external headwinds. And certainly sentiment, risk sentiment, is a firm driver of the Japanese yen, and the strength yesterday reversed overnight, so completely recovered that move that was seen from the cash equity open. And then that kind of makes sense, right? From a technical play, around that level, which was R1, the price action on the upsides kind of petered out, and we've moved back down to pivot, given some of the profit taking in this equity move that we're seeing at the moment in the DAX as we look to close that gap. But going back to the charts then, that explains the yen. So this was before the debate, and that's after the debate. See, this is purely on the risk angle. The other biggest one is obviously the Mexican peso, which has been getting absolutely killed of late as Trump has performed better and better in the polls. But this equates to, well, this was 1.6 or just over that. It actually ended up being closer to 2% in terms of the performance of the Mexican peso overnight. Gains for other emerging market currencies like the rand as well. This comes as those are seen as the most vulnerable if Trump scrutinizes trade deals. So hopefully that explains that one in a bit more detail. Moving back to the charts though, another one to look at this present point is crude oil. You know, we've seen pretty volatile trade ranges of late. This was obviously the Friday move where Saudi Arabia basically said that the possibility of a deal being done, well, let's paint the full picture first. That was the bid in the morning on that Reuters story about them and Iran, potentially an offer being put forward, which would be a pretty landmark step given the fact that they don't really see eye to eye on many different levels. Then the reversal of that, when Saudi then came out just before, well, this was after European close really, going into 5 p.m. on Friday when Saudi came out and said, well, this is just consultative type meetings, no real action's going to be taken, massive move to the downside we're seeing. And then yesterday, obviously, we had the actual meeting kick off. And one of the main charts I was sharing with you yesterday was this one, was about knowing who's the pertinent players to be monitoring news flow. Because as we've said before, when it comes to these types of meetings of oil, OPEC and non-OPEC, they do like to talk to the press and certainly give their point of view. And when we're talking about countries like Libya, is the most extreme example where their break-even oil price to balance their books, oil needs to be trading at just shy of $200. What do you think Libya is going to be calling for? Of course they want immediate action to be taken. But given their market share equates to 0.5% of global oil production, you know, they carry a almost irrelevant amount of sway for the markets. So on the gauges here, really it's Saudi and Russia where the balance of power lies. And again, it's not just Saudi. Russia is hugely important, even irrespective of the fact they're not part of OPEC. So what you've had here is yesterday a lot of noise coming out of the likes of Nigeria. You get Ecuador, Venezuela, those types of names who are really struggling, feeling the fiscal pressure of low oil. And so oil has moved up, a lot of headline noise, but ultimately you've had a bit of a pullback late yesterday. This is as it was starting to come, the general market consensus that it seems unlikely that we're going to get some sort of deal. And then this morning, when we've come in, you've kind of seen another slight push to the downside. We're down around 31 cents at present. You have that earlier overnight low that we're seeing down at 48, and then the pivot's kind of sitting not too far below that level at 45, 42. Interesting comments that we're seeing from overnight came from Russia. They were basically saying a similar thing. Their energy minister, Alexander Novak, has said that basically Russia is not preparing for any coordinated production action as he attends those meetings. So pretty much killing any prospect, because it would be contingent on them also getting involved. So be aware though, that meeting's ongoing till Wednesday, so I would be expecting more oil related comments to come. As I'm talking, I can see on Twitter the Russian energy minister's been talking again. Hard to tell whether Algiers talks will produce agreement to stabilize the market. That's the latest one just coming out of Novak at the moment. So pretty much reiterating that overnight comment. A quick look ahead then on the calendar for today. The actual morning is pretty quiet. There's really nothing too much of great significance. One number we did have overnight was Chinese industrial profits. I guess a subject in which very few seem to talk about these days, but obviously is simmering in the background still, so to speak. And overnight you had profits in China's industrial sector in August rose at their fastest pace in 3 years. So supporting a growing view that the world's second largest economy is stabilizing. So some pretty positive data out of China. It'd be interesting to see, because much like the Fed situation we've had recently, the Chinese situation is something similar, whereby it's almost, if the data's too good in China, it starts to lessen people's outlook that potentially the People's Bank of China will continue to prop up their market. Actually, it can have negative implications if the data's too strong. But overall, the market seems to have just taken that data in its stride in terms of the overnight performance of the Shanghai comp. Otherwise, as I said, pretty quiet for the morning's activity. This means that likelihood is going to be more of technical plays and potential retracements of some of these moves. Obviously, you're seeing that play out in the DAX at the moment, because it come back towards where we finished up on Monday's session. The dollar index has seen a little bit of weakness this morning, but overall is flat at this present point. Looking ahead towards this afternoon, though, we'll get the service PMI. This is the preliminary, so more important of the two we see on a monthly basis. Service PMI from the US. A quick look at that. That's been a fairly consistent piece of economic data from the States. The last time out, we printed at 51 in the month of August. It was in fact the lowest reading since February, but all in all, these are very marginal declines from the previous July reading and what was seen in the summer period of 2016. And as we were saying before, likelihood is that US economic data takes a bit of a back seat, given the timing of the next rate hike is not really seen until later on in December. Otherwise, you've got the API crude oil inventory numbers, but as per usual, not until the close. So after US markets are finished up for the day. So that'll be more influential for potentially evening's trade or when we reopen over or Wednesday morning. Keep an eye out for any source comments stemming from OPEC. Again, even though the state of play seems to be that a deal looks unlikely, that can change in an instant. So just be keeping an ear out on the squawk in your Twitter feeds. It should be up on your screens just in case. Obviously, I'll be monitoring that as well for you. And then from a speaker point of view, could be interesting because you have Fed's Fisher, one of the more senior members of the FOMC and a voting member, of course, is giving a speech at an American university today. So also, just in case of any realignment of Fed communication, that'll be a key one to look out for just before the cash close in Europe. Okay, guys, going to wrap it up there. So, again, pretty quiet for this morning. Likelihood, people just digesting the market moves from overnight on the back of the Clinton triumph in the initial first televised debate. Later on this afternoon, you do have one sole piece of really important, or only big piece of important data, service PMI. Richmond Fed second tier to that. And then you've got Fisher speaking later before the European cash close. So enjoy your session, and I'll catch you in the chat room. Thank you.